Are you trying to learn from MicroStrategy and the trades we've been putting together this week? This will be the fourth video that I put out this week on MicroStrategy because it's crazy. And I want to show you how to navigate the waters. A lot of people are kind of in this trade, maybe got stuck in it yesterday when it was all the way at its high at like $550, and then it crashed yesterday, which I warned you about if you've been watching my videos. And I said, listen, you got to sell deep in the money. Today I'm going to show you how selling deep in the money would have protected you, and I'm going to show you what actually happens with the time premium, the juice that we're going after as you wait for this to come in. It hit a high of 543 yesterday and ended up going all the way down to 370, something like that. And today it's kind of trying to bounce, which is natural. You get all these sellers that get out and they panic, and then people come in and try to scoop up at the bottom. So, I figured there'd be a little, what they call a dead cat bounce, because you could throw a dead cat out of the window and it'll still bounce a little bit. And there's a dead cat bounce going on today. The stock closed at 397 last night, and it's at 410 today. So let me show you how that affects the portfolio. So this is one of the accounts that I have MicroStrategy in, and I will say that yesterday on the way down, and of course I didn't catch the bottom, but on the way down, I added another 2 contracts to this. So if you look at what I own on MicroStrategy, you can see I've got the 400s, right? And I've got the long position being the 250s. I wanted to get those deep in the money so that they could withstand a drop, and they still have an 85 delta. So they're still moving 85% of the value of the stock. When that goes down, that works great for me. And when it goes up, it works fine too. It's just, this is not a one-week trade. This is an over and over and over trade. So taking a look at what's going on, I've got the 400s. Now, if you remember right, I got $104 and change when I sold them, and I think I did roughly the same amount on the way back down. And so you can see my average trade price is 103.10, okay? Now, a lot of that was juice, and when I sold, I got more than $24 in juice, which was the original amount. So let's take a look at what we got. The extrinsic and the intrinsic, those two values make up premium. So you could see the premium says the market value of those 400s is 51,975. Well, when you add 31.18 and 13.98, they're moving all over the place. When you add those together, you end up getting this market price, right? So there's 2 components that make up a premium, or the amount that you get or the amount you pay in an option. It's the intrinsic value, how much it's in the money, and the extrinsic value, how much it's out of the money. Well, the stock right now is trading at 411. And so since it's trading at 411, it's got, it's a 400, so it's got $11 worth of intrinsic value, or 1043 as it's fluctuating, and it's got $41 worth of extrinsic value. The extrinsic value is the juice. That's how much we get. Now we got about $24, $25, $26 worth of juice, which is the amount that we have to get to make our income. So what happens is we collect the juice, which is awesome, right? And we got about, let's call it $25 a share, or $2,500 a contract. I got 7 contracts. So we're talking about $17,500 on this trade in income. The problem is we have to wait for it to come in. It doesn't expire until next Friday, which is a week from today. So you can see 7 days left. So what has happened is now it's closer to the money, right? When it was 460, it was $60 away from it, but now it's 411. It's only $11 away from it. And more people think, well, I'm going to be able to, it's going to go back up to 460. So they're willing to spend this extrinsic amount of money to be able to make money. So they're the big gamblers, right? We're the sellers. We're the smart ones, I think, here. But if you remember right, and if you look at the price here, it says 103.10. That means for every 100 shares that we got $10,310 into the account as cushion. If the stock declined by $103, we still really wouldn't have lost very much money. We would have lost a little, but not much, okay? Because we protected ourselves with the cushion. And I tried to tell you, hey, listen, protect yourself with the cushion. Don't go buying these things at the money. Go deep in the money so that if it comes down, you protect yourself. Well, today you can see it's short. We went short on the calls. We sell calls. And so when you go short on a call, the extrinsic value actually goes up, but the intrinsic value has gone down. So the intrinsic value, when let's say the stock was at 460, is $60. We got $60, but now it's worth 8, so we get to collect 52 if you subtract those out. That's not profit. That's just the protection that we got by being deep in the money. Does that make sense? And then the profit is, this extrinsic value. Well, the extrinsic value has gone against us today because the stock is so close to its strike price. So if you had to close out the position today, you would actually lose a little bit of money. In fact, if you look over here, the P&L open, it's fluctuating all over the place, but it's $4,000. Now remember, this is a $17,500 income on the trade that I'm going to get. And so you could see that on the day, since the stock is up a little bit, I'm up $3,000. Now this is going to move all over. A second ago it was positive, and that's because the bid-ask spread and the thing is moving around. But we have to wait for this 39.74, this extrinsic value, to come back to us, okay? And so as time goes forward, that's our money. That's our money. Now, the question is, will it stay over $400 until expiration? Well, every day that goes by, I get more and more extrinsic value. And that puts money into my account, essentially, right? By the time it expires, it's going to have zero extrinsic value. There's no time value left. That's the same thing as extrinsic value. And when there's no time value left and we're short that, we buy it back for essentially zero. We make all that profit. Now, if we had to buy it back today, we would lose the difference between $25, which is the amount of extrinsic value that we sold the option for, but we'd have to pay $38 to buy it back. On the other hand, we sold for, let's call it $60, the in-the-money amount, but we'd have to pay only $13 to buy it back. That's why the P&L is only down a little bit. Now, if I show this to you next Monday or Tuesday or Wednesday or Thursday or Friday, this extrinsic value is going to go down until Friday at 3:59 and 59 seconds, it's worth zero. Okay, so that's where we make the money. And I wanted to show you what happens after you get a candle like that. After the thing drops like a rock, we still didn't lose much. Right? We're only down $2,300, and that's if we got out of it today. If we just wait until all this extrinsic value comes in for us, the $25 we got, I know it says 38 on the screen now because it's much higher now, but we're not trading it for now, we're trading it for next Friday. Now, we could roll down our 250s if we want, right? We could move these down to the 220s or whatever. We could move these 400s, we could buy them back, and we could move to the 350s. But if we buy them back, we got to spend $39 of extrinsic value. So I'm not going to do that right now. I calculated that this thing might go down to about 380. You know where it went to yesterday? 370. I was off 10 bucks. Okay. Now, the idea is that we are in this for the 400s, and I'm going to let the stock fluctuate. Right now, it's at 411, just right where I started making the video. So it's bounced a little bit. Will it go higher? Will it go lower? I'm not sure. I'm in it for the juice. A lot of you are making comments, and by the way, thanks for all your great comments. But please understand that this is not about whether the stock goes back up to 500 or how much money you can make by buying calls. This is not about shorting. A lot of people are, commented, hey, this is a great short. I don't know if it's a great short or not. I don't like shorting stocks that have gone down $120, $130. That doesn't make a lot of sense to me. But look, if you want to short it, you're an option buyer. I'm not an option buyer. I'm an option seller. I make the money on option selling. And that's what my videos are all about. And so if you want to go buy and you want to do iron condors and you want to do all these crazy straddles and all this stuff, great. There are other people's videos that you can watch. I focus on the juice, the extrinsic value, and I just wanted to give you kind of a quick update here on a Friday. We got a week left to go, and I'll probably give you another update next week. So I hope that's helpful to you, and I hope you're learning by watching these videos. Listen, don't get sucked into all the greed that's out on Wall Street. Don't get sucked in that people think, oh, it's going to go to 1,000. It may, but you've got to protect yourself while you wait for it to go to 1,000. Anyway, enough for me. Catch you later.